Hey guys, welcome back to the channel. In today's video, we're going to be talking about the banking system and what we're seeing with the deposit drainings that is going on in financial institutions right now. So overall in the United States, a lot of individuals are pulling deposits out of regional banks, pulling them out of credit unions, pulling them out of smaller banks. When you look at Comerica, when you look at Huntington, when you look at Fifth Third Bank, a lot of local banks here are losing a lot of deposits, but the question is, where do you put all that money? For a majority of individuals, they are moving it into larger institutions like JP Morgan Chase and Wells Fargo. There are some institutions that are seeing a massive outsource or outflow of cash, while other ones are seeing a major inflow of cash, which again, I'm gonna go over a couple things on why this is kind of interesting, and they're kind of poisoning these larger institutions almost to monopolize the game when it comes to banking, which can be a little bit scary. So again, deposits have been moving out of a lot of the smaller institutions, going into larger institutions, which changes the funds availability, changes the fluid, really gives a lot of concern when it looks to the smaller banks. It seems like it is starting to slow down, but this is initially what was happening, where literally like dominoes, you could see an entire domino within the banking system, which really shows a weakness that we have within the financial institution, which means it is something, of course, that the government is looking to back, that they're trying to correct, that they're trying to fix. Fundamentally, if us as Americans, as citizens, as taxpayers, fundamentally, if we lose faith in the banking system, I couldn't even tell you what would happen at that point. If literally people quit paying their loans, quit taking out loans, you would see a very fast and a very hard collapse to the financial system that we have right now. And that is where it gets a little bit harder and really tougher to look at. So what has happened at this point, guys, was the 11 biggest banks in America have banded together, injected $30 billion. That is right, guys. They literally put $30 billion into First Republic, essentially returning some of the deposits that they've gained. So we took our money out. We took it to the larger banks. The larger banks took the money, gave it right back to First Republic to keep them afloat, which again is kind of an interesting way to keep the institution or it's going. The larger institutions also do notice that if they kind of go together, if one starts failing, like we said, dominoes, you're going to see a lot of larger institution banks start and continue to fail if they don't do something to really get this out of there right away. So with this, to really stop the panic, what we've seen with SVB, they have kind of monopolized on some of the avenues, and the government has actually set up a kind of a side business, a side lending business to institutions, to financial institutions that are having issues with liquidity, to be able to kind of backstop all of the customers from multiple banks from leaving and also rippling the events around the world. That is where, again, a lot of people were very concerned. But what does this mean? This is where it puts JP Morgan, Goldman Sachs, a lot of these other institutions in a very weird position, because essentially now they have the capital where they're playing multiple roles. They're donating money or putting money into this fund to keep Signature Bank afloat. But because they are so heavily funded with customer deposits, they could also be in a position to acquire some of the customers, some of these failing institutions. Again, it kind of is going to be an interesting play on which way they are doing. Even when you look at Signature Bank, they brought in JP Morgan Chase to go ahead and kind of tell them what to do. It is kind of the restructuring in there. They brought in some of the people who were doing it well at the larger institutions to really go in and see exactly where the shortfalls are and what they have to calm down and what's going to happen. So although the inflows on the top institutions have slowed down a little bit, they have not stopped, guys. A lot of people, again, are still taking a lot of funds to these larger institutions, to include JP Morgan, Bank of America, Citigroup, Wells Fargo. Even in the CNBC article that we are kind of looking over, all of them just literally declined. They're not saying anything, guys. It is being really hush-hush, really quiet till they figure out exactly what is going on. Now, again, you couple this with the Federal Reserve continuing to raise interest rates. Last one, we've seen 0.25%, bringing the Fed's fund rate to 5%. With it being at 5%, all of these banks having money that they can't lend out. So now when you take your money to a financial institution, especially with higher rates, they pay you a return on that money, which means the bank has to utilize that money to earn more, which is usually from lending it out through investing, things of that nature. But they have to earn more money on your money. And that is essentially the margin that they're working with to really cover all of the costs within there. Now, again, with the Federal Reserve slowing down things, margins are getting a lot tighter, which is the reason why we're seeing nationally a lot of institutions, including, just every single sector of the market, you see job force reductions. 10,000 here, 20,000 there. The Fed is trying to get to the 2 million point unemployment. So having 2 million employers or 2 million individuals that are out of work, removing their ability to pay their bills or removing the ability to essentially buy more is the big things. It's going to be a whole nother issue if people quit paying their bills. But as they continue to collect money with these larger institutions, again, it's going to be really interesting to see exactly how this is going to fall. Now, a lot of people are also looking at the next domino. What is going to be the next financial institution that we could see teetering on the brink of failure? That's where it comes a little bit difficult, because at what point do you just let an institution fail for the betterment of the institution, or do you literally save everybody? And now we've been looking at, First Republic was saved, SVB was saved. Now does it come to the point where if any financial institutions are failing, that someone is going to step up and kind of back their deposits? Even where we have poor management, poor financial management, things of that nature, are they still going to be backed? Are we still going to be able to protect every bank we have within the United States? Or is it going to be essentially a merger of all of these institutions into just a couple larger banks, which we know the issue with that is if it gets to that monopoly stage, they can really set and dictate the rates depending on what they want to pay. If you go to an institution right now, from 1 to 2 to 3 different financial institutions, chances are a majority of the rates will be similar, but they are not identical. And again, that's how a lot of banks do make money, is the margin that they operate on. As soon as that margin is gone, as soon as you have institutions that are literally running everything that can charge what they want for the goods and services that they provide, it's going to be very interesting to see and very scary to see. There will be some smaller institutions with similar issues, which again, can't manage their balance sheet. We don't know if that is going to come short, long term, depending when it is, guys. Stay tuned to the channel. I am going to keep you updated. I absolutely love covering the financial media post of this, and also the background when it comes to the financial education, counseling. Really, the more you know, guys, it is really the better that I see it. All right, guys, so that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.